Market actually has picked up pace. Look at the mid-caps, Lata. The mid-caps are up 0.5% and quite a bit of strength seen in individual stocks. So let's get in Sanju Verma, CEO of Violet Arch Global Managers, to talk more about what her view is on the markets. Hi Sanju, good morning. Is my voice reaching you?
Yes.
Okay, hi, good morning. It's been a sort of a tumultuous ride in the last couple of months. I mean, if you'd want to call it that, it's been absolutely flat. But we haven't built on to our gains after the elections. What's the sense you're getting? Is this just a pause before a next leap up? Or do you think this consolidation phase may go on for a while?
Sonia, I think the consolidation phase is here to stay for at least a couple of weeks more. I think the next big leg up with respect to the rally should be, in November or December, and there is a specific reason to that. I think the second half of the markets towards the end of the calendar year have always been 8 out of 10 times far better in terms of returns than the first half, if past statistics are anything to go by. But more importantly, I think there are two very important developments, come November. I think you will have the outcome of all the 4 or 5, assembly elections, with respect to elections in Maharashtra, Uttarakhand, Jharkhand, sorry, not Uttarakhand, Maharashtra, Jharkhand, Jammu and Kashmir, maybe elections in Delhi. So I think, once the outcome of these results, and all of them, mind you, are ruled by, Congress or its allies. So I think once these election results are out of the way, and my sense is that, the current BJP-led NDA will come back with a vengeance in the assembly elections as well to these 4 or 5 states. I think that should provide, some assurance to people who've been wondering whether, there will be a repeat of the phenomenal, numbers that the NDA could pull in, May this year. And I think the other big international development, which nobody seems to be focusing on, is the fact that there is a mid-year election in November this year to 33 out of the 100 seats in the Senate. I think that's very important. Don't forget that today the Democrats, in the US, have a majority of 56 to 44 versus the Republicans. So it is a very wafer-thin majority. And, in case the Democrats win the November elections, then the sense I get when I talk to overseas investors is that then you can certainly say a goodbye to fiscal austerity for a while, given Obama's background and given that, he just has 2 more or 2.5 more years to go before his term expires in 2016. So you will see a lot more monetary easing. Maybe the rate hike that people are expecting in the US, that will not happen in the first half of 2015, but certainly in the second half. But in case, the Democrats don't win those 33 odd seats which are coming up for re-election in November, and the Republicans have their way, then if past precedence is anything to go by, the Republicans are far more hawkish. They are not as dovish as the Democrats, and then a rate hike in the US, could happen earlier because the Republicans will try to arm twist, as has been the case. So I think this is a very important development, just to make, superficial, off-the-cuff, generic blanket statement saying, there will be a rate cut, there will be monetary tightening from the US, and that's the big international event to watch out for. Well, yes, all of that is true, but all of that hinges on what happens to the Senate elections in November. So I think these are the two key developments: the local, assembly elections in India, the international election there. So I think I would try and keep a very close eye on these two developments, and my sense is, that you will see the next phase of the rally post-November, and I also believe that, we've sort of, as I've always been saying, the bar with respect to expectations, that's very high. And I think that's so evident even from the earnings numbers that have come in. Look at how a TVS Motors was punished. It lost 17% in 2 trading sessions post-results. It was not as if the results were bad. I mean, come on, a 40% growth, in net profit, a 45% growth in exports is great. But markets have become far more discerning, far more discreet. So everybody was hinging and, hinting about the fact that, hey, look, the margins have not come in at 7% as we anticipated. They've come in at 5.5%. So I think the markets will increasingly tend to reward companies which meet estimates, companies which, miss estimates or do not, hit the bullseye. They will stand to be punished. So it's not going to be a generic linear one-way rally from here on. I think markets have become far smarter.
Sanju?
And I think that's the way it should be.
Well, Sanju, since you started off with TVS, that is exactly where we want to take the conversation into specific stocks that have impressed with their performance. There are some borderline cases. How would you look at Crompton Greaves, for instance? How would you look at L&T, for instance? What are your views on both these stocks at this point in time?
Lata, I think with respect to capital goods as a space, I like both L&T and Crompton Greaves. In fact, on your channel, I've been a big proponent of Crompton, even when it was trading at barely just about 100 or thereabouts, and it's doubled from those levels. Coming specifically to L&T, I think L&T is a large stock. And what I found rather disturbing, in fact, the only disturbing thing is that there is huge volatility with respect to the performance that they put in. Remember, in the fourth quarter of FY14, the results were spectacular. The E&C side of the business saw an incremental 64% jump in the order book. The domestic order book has been phenomenal in FY14, growing by 90,000 crores incrementally. I also remember that, every optimistic analyst on the street was taken by surprise when they posted a margin, to the tune of 11.5% on the E&C side of the business. And that is pretty good given that, we are used to seeing them doing only 10.5%. But look at the results in this quarter. I think what took everybody by surprise, and it was a rather nasty one at that, was the fact that they made 900 crore provision to their 4 or 5 large orders from West Asia. And I think what I found rather disconcerting was the fact that these orders are now coming close to closure. And the total order book size of these West Asian orders, these 4 or 5 odd orders, is something like 10,000 crores. So, from a total order pile-up of 10,000 crores from West Asia, close to the orders coming to a closure, if you've still made a provision of 900 crores, that can only mean two things. Either the company is way too conservative, for which it would need to get a thumbs up, or the fact that there is something more to it than meets the eye, and there's more trouble brewing ahead. And not everything is out, and there is a Pandora's box that could open a whole lot of other nasty surprises as we move forward. So I think L&T is a stock that had a brilliant run up to 1650 plus. It corrected thereafter. I think I would like to sort of wait it out. There's no need to rush in. Maybe watch the next quarter results to get some sense of consistency. And I think, once we see that there is consistency in numbers and there is a certainty with respect to order inflow, order intake, top line growth, which have been volatile from quarter to quarter, then I would take the plunge.
I want to actually squeeze in one last question before we run out of time. Your views on Infosys. I mean, there's some pressure that the management is getting to come out with a buyback. But if that actually comes through, then what do you advise investors should do? And what's your call on the stock in any case?
Sonia, I have not been a big fan of Infosys. And, it has nothing to do with the buyback. I think it has more to do, when you decide to buy or otherwise, with respect to a stock like Infosys, it cannot be event-driven. Irrespective of the fact that there's this huge cash pile that has been sitting on their books now for ages. I think when you look at a stock like Infosys, irrespective of, the stock price performance, there are still, brokerage reports saying the stock will go to 3,800 and 4,000 and maybe beyond that. Stock prices and stock movement aside, I would like to see, how the, management trajectory pans out with respect to bringing changes going forward. Because their 3.0 strategy clearly failed over the last 2 years. It's the first time that an outsider has come in. While that's great news, I think the fact of the matter is, as I've always maintained, he's going to be based out of California, and I somehow am not a great fan of this remote control style of management, point number one. And point number two, more importantly, is the fact that, Vishal Sikka is a products guy. And while it's very clear that within the broader IT space, the lines between product and services businesses are blurring, I think that's still a little time away. So in India, I think it will be very difficult for a products guy to make the transition into a company which is largely a services-oriented business. So I think that's my worry. And as I've always maintained, the pecking order for me would be TCS, Wipro, Tech Mahindra, HCL Tech, and I would stay away from Infosys until I see the management walk the talk 1 or 2 quarters down the line.
Fair point, Sanju. Out of time. Thank you very much for filling us with so much rich details about the stocks you just discussed.